fears of inflation, cryptocurrency enthusiasts like me, since I consider myself a mild one, believe Bitcoin to be a hedge against inflation. In this video, I'll provide an in-depth answer as to whether it is or not. The short answer is no. Now, hold your horses. I'm not saying it's worth nothing, like Boomer Buffett, but it's important to carefully consider what traditional hedges against inflation are. So instead of using complex equations that only nerds like me get off to, let's try to stick to basics. So the first question is, what is a currency? If you've ever taken a basics economics course, you probably already know what a currency is. And those are three things: a store of value, unit of account, and medium of exchange. What do those things really mean? If you contextualize Bitcoin as a store of value, you're essentially saying that you'll put aside money towards it because you think it's a stable asset and it won't collapse. Therefore, it can easily be liquidated. As we all know, Bitcoin is not stable. We've had the monstrous corrections the past few months, and the 2017 crash lost half its value to show for that. I remember that vividly. I was a freshman in university. Now, I don't do Forex, but anybody with a brain knows that an ideal currency is stable. If it doesn't drop 30 to 50%, then rise back up 40% within days, unless it's a Turkish lira. If you're talking about Bitcoin being a unit of account, it most certainly can, but it's not really utilized in that sense. When an American company reports its earnings, it does so in USD. Yes, even if it's MicroStrategy. When a British one reports it, it's in pounds and so on and so forth. The average person in corporation doesn't report their net worth in Bitcoin or its revenue in Bitcoin because it's kind of abstract. Can you imagine someone saying that their corporation generated a revenue of 50 Bitcoins in a quarter? It sounds ridiculous, but maybe it'll be like that in the future. Who knows? Even in the context of being a medium of exchange, Bitcoin doesn't really make any sense. Most people buy into Bitcoin to hold it, but that's about it. It's not really used to buy and sell things often. It is, but not often. In economics, the concept of velocity is used within the context of money. Economics states that if a currency is used constantly for goods and services, the more it is, the more higher the velocity it has. If it's used minimally, it has a low velocity. Usually when a currency has a low velocity, it will eventually lead to massive deflation. Fun fact, it's actually somewhat considered that the low velocity of money triggered the Great Depression, according to Friedman and Schwartz anyway. I'm not saying that Bitcoin will crash, but the inherent risk is there. When considering a hedge against inflation, you want something stable. One of those things that's traditionally considered a hedge is gold. Since gold doesn't go through price swings as hardcore as Bitcoin, and historically has been proven to go up during inflation, but it's down year to date, which is extremely unusual. It really makes you question that, is inflation really happening, or is it a temporary supply chain shortage of multiple goods that is jacking up the prices? Well, whether or not you believe it being transitory or something that will continually persist, Bitcoin is not the best tool to hedge. A hedge is supposed to minimize risk. It's within the definition of the word. What you're doing with Bitcoin is you're amplifying your risk, since it's an extremely volatile asset. I think Bitcoin and blockchain it uses is extremely revolutionary technology, though, but one where the true value will take a lot of time to finally be able to properly assess. You'd have to look at even the origin of Bitcoin. Nobody knows who exactly made it. Its creation is attributed to the anonymous Satoshi Nakamoto. Half the supply of Bitcoin is already gone, but due to the nature of the way it works, it's approximated it'll take 120 years for all of its supply to be gone. I don't think it's a safe and stable hedge against inflation because this is like an esoteric instrument that no one knows the origin of. This also begs the question that will the continuous scarcity of it devalue it? No one knows for sure, as we cannot predict the future. You can almost compare it to gold as well. As you know, not all the gold in the world has been mined, but the amount that is available on the planet is limited, and the amount that has been mined at any given time historically was more or less. When global gold extraction was low, for a period, rapid deflation of gold itself and currencies that pegged to it fell as well. Meanwhile, when it was found in large amounts for a particular year, massive inflation happened. This is why most economists argue that returning to a gold standard is a terrible idea. It is historically proven that currencies such as USD and pound sterling are more volatile when they utilize the convertibility of the gold standard. Anyways, about shitcoin. Bitcoin. Bitcoin will probably not go through the price swings gold did in the context of supply, since less will be available and mined due to the law of diminishing returns. This does suggest, though, it is possible that it can devalue massively once supply is reduced significantly more. So what is a hedge against inflation? Right now, I can't say that I'm 100% sure. I don't think anybody can. It's possibly gold. It could be at a discounted price right now, but we don't know for sure because it's already fairly priced possibly due to its monstrous 2020 return. However, if you want to invest in Bitcoin because you believe in its future as a currency, then I don't think that's a bad idea at all, or even stocks. Stocks can be considered as a way to combat inflation, but not a hedge. Inherently, a hedge is supposed to minimize risk. You're minimizing risk from holding cash, because your cash's purchasing power is going to degrade due to inflation. $100 will only be worth $96 in a year if the inflation rate's 4%, and stocks in general are risky. You never know when the systemic market risk will kick in with absolute certainty. That being said, I'm invested in a lot of stocks, and I advise the average investor in stocks to aim to beat the market. It's not hard at all. Just do your own due diligence and security analysis. You might as well, since stocks are risky, so aim for an above average reward. Maybe you can get a 30% return, which will turn into a real return of 26% since inflation this year is anticipated to be around 4%. Bitcoin might yield you the same or less depending on when you buy in, but again, it is significantly more risky, since stocks like the FANG stocks don't exactly lose 40% of their value every other month just to regain it.